That's coming up later on ET Now. But meanwhile, let's talk about EPF, Employee Provident Fund, and interest rates on EPF. They are likely to be announced on Tuesday. The current rate stands at 8.1%, which is already at a multi-decadal low. So can EPF subscribers expect a rate hike or not? And this is happening. We're asking this question as so many countries are moving towards higher interest regimes on employee provident funds. Let's find out where this could go. My colleague Maithili Busturmat, consulting editor with ET Now, is joining us on this edition. Great to have you with us, Maithili. Now, this current rate that EPFO earns is 8.1%, Maithili. Do tell us why it has remained so low.
The EPF, you must not look at it entirely as a market-driven rate of interest, because the EPF is essentially a social security, and that also only for the organized sector, which might be a very minuscule portion, only less than about 10% of the entire workforce in the country is in the organized sector. So we're talking about something that applies to a very small part of the workforce, that is the organized sector. And here again, it is essentially a social security. So the interest rate on EPF, in fact, did not fall dramatically during the time when, soon after COVID, when interest rates fell so dramatically. When the RBI lowered the repo rate and interest rates fell, the repo rate was reduced, but the EPFO kept its rate about 8.5, if I remember right, during 1920. 2021, and 8.1 during 21-22. So the rate, though it's broadly in consonance with general rates, is not entirely, it's not a one-to-one relationship, because the EPFO pays its rate from the return that it gets on its investment, and it's tried to maintain the return on more or less the same level, so that people, the beneficiaries, the subscribers, don't have sharp swings in their earnings from their provident fund. So even though you might say there is a case to raise interest rates because rates have gone up, inflation has gone up, many people have lost their jobs, so they do look forward to interest rate on EPF, one must understand that it is not as if, there's a pot of gold at the end of the rainbow. The EPFO can only pay from the return that it gets from its investment. And broadly what it does, it tries to ensure that even when rates fall down very low, it gives its subscribers a reasonable rate of return. And during the times when the rates are very good, it's earning very well, it tries to build up a corpus. So one can argue that yes, there might be a case to move it up a little bit, but one cannot say that one has to move up as dramatically as, say, bank deposits, which have gone up by about 3% in the last 1 year. So one has to bear in mind where the EPFO pays from, what is it essentially, a basic form of social security, and then take the call on what is the rate to be paid.
Maithili, when you consider how social security works in the rest of the world, in other countries, how has India done so far? Because yes, social security means you have to play it safe, and so you have to consider so many different moving pieces to ensure that an employee, whenever that provident fund has to come into the kitty, obviously gets the max that is possible. So in that kind of scenario, how has India done? How has it fared with the way interest rates have been offered to employees on their provident funds? Yes.
I think far more important than that, Vikram, really is to ensure that there is a social security network at all. For the vast majority of the people in the country, the workers, there is no social security worth the name. So that is what I think we need to focus on first. Extend the social security mechanism. We have a PF, Employees Provident Fund, for the organized sector. We have a PPF, maybe for the people who are not part of the formal organized sector. But the PPF is largely beyond the means of those who are in the daily wage worker, etc. So what you really need to do is ensure that you have a basic social security net for the entire workforce, and the government, perhaps with taxpayer money, can give some basic minimum income for everybody. And then talks in terms of stopping it up with whatever contributions that individuals can make. As you can see, the controversy that we've seen in the case of the pensions that we're seeing for the government people, where you move from a defined benefit to a defined contribution scheme. And then we've seen the total ruckus that is being created by various state governments going back on that promise and doing enormous damage to the fisc, because there's no way government can go on paying endlessly. The earlier pension scheme was not practical at all. People have to learn to contribute for their own old age, for their own security. But at the same time, the state must have the responsibility of ensuring some minimum level of sustenance for everybody, particularly those who are not able to earn for themselves.
The pandemic has changed the scenario so much because in terms of security, that is something that most people would require on a heightened basis. Even right now, I have news coming in about preparedness for the higher number of COVID cases. In times like this, as far as EPFO is concerned, about the ability to really give out higher interest rates, how much of a possibility do you think it is and how much further do you think they could go this time around?
Well, it's very difficult to give a definite number. There might be a case for a small increase, but a very slight increase. But I said, even during the COVID years, the rates were higher than what the rates were elsewhere. 8.5, last year's rate of 8.1 perhaps may not have been that comparable, but 8.5 during the COVID year was way above what the rates were elsewhere. So as I said, the EPF can only pay out of its own earnings. It cannot expect the government to subsidize it. So if it has enough corpus, it can pay out more. But today, I do not think there is a case for it to move up its interest rate as dramatically as in the case of bank FDs. Essentially, we must focus on extending the social security net rather than on saying that we need more, because there is a limit to how much the EPFO can pay out. It has earned quite well in the last year because it has started investing in exchange-traded funds, and hence the returns have been better. But ultimately, it's a question of how much can it pay.
The equity investment limit, do you think that would help?
Well, as I said, since it's essentially a social safety net, the first criterion is safety. So as far as safety is concerned, which is why even the investment pattern for the EPFO has been decided, laid down by the government, and almost 85% of it has to be debt instruments. Because debt instruments are considered safer than equity. And as I said, the first priority for any social safety net is safety, because the EPF is essentially meant for the safety of the family of the worker. So given that safety is the most important, I think there is not much of a case to increase the investment in equity. Equities, as we have seen time and again, are risky investments.
Yeah, and just a moment ago, I was talking to our guest about the pressures that have built on the main benchmark index, the Nifty as well. Over a period of 4 months or so, we've been in red territory. So yes, as far as the moving pieces around the world are concerned and the bearing it has on our own markets, that's something to keep in mind, even as you look at the possibility of raising interest rates through the equity route. Now, that's something else to consider. We'll keep monitoring the situation, Maithili. Thanks very much for joining us with your perspective on this. Always good to chat with you.